Hello, everybody. Thank you for your patience. I know it took us a couple more minutes to launch than usual, but I'm excited to welcome back one of our partners, Vouch, into the Grow curriculum about a very interesting, dimension of entrepreneurship and running companies that is often not thought about until it's either too late or it's, a friction point in, moving something along and making more progress. And that's things to consider when you're expanding your team, literally from a protection and coverage standpoint. Insurance is often, for most people, myself included, before getting into this, you think of like homes, medical, like maybe like an umbrella thing if like I am, really extra cautious. But in business, there is a huge amount of complexity about the kinds of insurances you can get and when, and they can really save the day, especially in the early days of a startup where you're being kind of, you're pinching pennies, you're sort of extending your runway. And some things can happen, especially on the nature of startups being uncertain, risky, and constantly pivoting, where the result could be you just stuck with a massive bill and no recourse, because you didn't have any sort of coverage. So when do those things make sense? What's the kind of the roadmap and the various inflection points and milestones that make getting more protection for your startup a very important and strategic thing to do? I could not tell you. I am still learning some of it, but Vouch can totally tell you because that is their specialty. They are a startup themselves, but they focus particularly on startup insurance, and they've broken it down in ways that is much more applicable to companies of the very uncertain and changing natures of startups. So if you've been to other events where we focus just on basic insurance and even branding stuff, they're very spiritually aligned with what we like to do, which is, that, what is it? Ounce of prevention is worth a pound of cure. It's like, don't, blow your head open about every possible thing that you could do, but just work with the right people at the right time to really give yourself that 80-20 level up so that silly things don't ruin your startup. And instead you can focus mostly on the cynical stats of our industry of really trying to make a business work. So I am joined by Ali and Chris today. You might have seen Ali before some of our previous programming. Chris, is their first time. Great to see you. They're going to tag team a presentation on kind of the team expansion and what kind of things to consider. I will kind of MC this. If you have any questions, please use the Q&A. Feel free to throw your startup name and your location in the chat, and I will interject if it makes sense. And now I will stop talking and throw it over to Ali, who is going to kick us off.
Thanks, Ryan. Every time you introduce us, I'm like, you should work in insurance. It's like we got to figure out how to get you on the Vouch team.
I think saying I have no official insurance thing. They do.
Fair,
But
yes.
Nothing I say promises anything.
Totally fair. No, but honestly, I mean, that's what Chris and I spend all day, every day thinking about is, how do we help founders and startups like yourselves really, think through the, what your business is going through, what are the risk exposures that are going to come up, and how do you make sure you're well prepared, right? So really excited to spend the time today. Perhaps some of you have done some of our Business Insurance 101 kind of like introduction to risk management, risk transfer in the past. Really excited about this series that we're doing for the Grow track, because our goal is to really kind of deep dive into 3 of the most crucial milestones that you're going through. Today, we're going to focus on really expanding your team and hiring employees, which is relevant probably to everyone in this call, assuming that you're, either starting to hire, have already hired quite a bit, looking, to go through pretty big expansion efforts. So I think we have some good content to go through today, but what will really make it exciting and most interesting and relevant to you all, please ask questions throughout. So as we see questions come up, some of them we'll answer throughout as we go through, and then some we'll save for the end, but we want it to be a good use of time for everyone. So that's the goal for today. Just a couple quick introductions. So my name is Ali Schneider. I lead our partnerships team here at Vouch. Thrilled to get to work with amazing partners like us. And a big piece of what we do is really to help really educate, honestly, the startup ecosystem around how to de-risk your business at the end of the day, because as a founder, there are a lot of things that keep you up at night. And so, how can we help you have a little bit more peace of mind and think about how to mitigate, manage, handle some of those things. So that's me. Chris, you want to introduce yourselves?
Yeah, absolutely. Thank you so much for that, Ali and Ryan. Happy to be here with all of you today. So I'm Chris. I am one of the licensed insurance advisors here at Vouch. And as Ali said, this is something we do all day. So we work with high-tech, fast-growing startups in this industry, recommending when it's appropriate to purchase certain coverages, when it might make sense for your company to purchase these coverages, and then the specific limits you may need. So really, as Ali and Ryan said, I'm just here to educate you guys, give you a broad view of kind of what it looks like those first few milestones we see a lot of startups in the world going through, hiring some employees. So happy to dive into that today.
And I want to make one comment because Allie was doing my job better than I can do. This is part of a 3-part series. I threw a link in the chat where you can go find out to RSVP to the future events. I think we're almost doing one a week for the next 3 weeks or something similar to that. So, check out all of those. They're going to be full of content. And if you go through all this, you should have a really, really great idea. Literally in less than 3 hours, you will kind of probably understand your first 3 years of, protection coverage and when to hit the right points. So I put the link in there. We'll put that in the follow-up emails. And as always, we're recording this. We will post it. It'll take me a couple of days. We will send emails out. If you RSVP'd, if you're here, you will get it, rest assured. And back to you guys.
Awesome. All right, let's dive into some fun stuff. So I'm going to share my screen. Give me 1 second here. Go to slideshow mode. Cool. So went through kind of agenda goal for today. We're going to do a fun little disclaimer. The one thing that, Chris and I will say, we are licensed insurance agents. But here's the thing, insurance is rarely cut and dry. So we're going to do our best to kind of talk to insurance and needs at a high level today. But at the end of the day, everybody's needs are very different. And so what your needs might be a little bit different than, the majority of folks that are on the call today. And so we're always happy to have those one-on-one kind of individual conversations as well as it makes sense. So just to quickly set the stage, why are we here in the first place? I think we all recognize starting a startup is inherently risky, right? And companies fail for many different reasons at the end of the day, right? It's a risky business that we're all in. And so, ultimately a lot of these reasons come down to risk exposures that your business has, right? Legal challenges, customer challenges, data challenges. Today, we're going to focus on the challenges that come from hiring people, right? And so at the end of the day, pretty necessary to have people to run your business, to grow and scale. So hopefully content it'll be relevant to everyone. And as founders, right, one of your most critical jobs is how do you de-risk your business to the best of your ability? And, our goal with these sessions, we never want to run our goal is not for you to walk away being incredibly scared or fear mongering or anything like that. But the reality is that a lot of bad things do happen to really great startups and great people. So we unfortunately see that's part of the tough part of our job. We see it here at Vouch every day with the claims that we see coming in and the questions that we get from customers. And so I think it's important before we get into kind of the milestone itself is first to just take a second and talk a little bit about risk. And one of the things that we have spent some time on is this really simple but effective matrix that we really encourage our clients at Vouch to think about in terms of how to de-risk your business. Because at the end of the day, you have different tactics, right? You could accept a risk and say, this might happen, and I'm okay with that. Maybe it's, low severity and it's low frequency. You could avoid a risk in the first place, something that's really high frequency and a high severe loss, right? Maybe that prohibits growth though, because you're making choices that help you avoid those certain risk exposures. You can mitigate, right? What are the things that you can do to decrease the chances of something happening, right? Whether maybe that's hiring a really reputable law firm from the start to help you do all the right things on the back end, or setting up an employee handbook. We'll talk about that in a little bit. And then finally, you can transfer the risk, right? And that's ultimately what business insurance is at the end of the day, transferring some of that risk to a third party if it does actually occur. And so when we think about how we actually, as a high growth startup at Vouch, we've been around for the past 4 years now. We've grown pretty significantly, but we still do this, as at a high level, at a leadership team. We do this within our individual business units as well. Is we really look at our individual kind of risk register, right? What are the things that keep us up at night? How do we identify what our biggest risk exposures are? How do we prioritize those risks, right? How likely are they to occur? And if they do, how severe are they? Is it, a LaCroix spilling on a laptop type of risk, right? Hardware risk, or is it a huge, cybersecurity risk? And then what are the actions that we want to take as a team across that framework, right? How do we avoid, mitigate, transfer, and accept? And then how do we monitor over time, right? So again, pretty simple, but pretty effective framework in terms of thinking about the ways that we can de-risk a business and thinking about that structure as a founder. And so today we're going to talk about hiring. So insurance is one of those things, and risk exposures generally, right, are going to come up at all different kind of milestones and key inflection points within your business, right? There are going to be different risk exposures associated with raising capital, which we'll talk about, I think, next week with, acquiring customers. We'll talk about that in a couple of weeks. raising debt, getting a new office space, right? But what's really interesting about hiring and scaling your team, right, is that these types of claims are by far the most common claims that we see here at Vouch. So it's something like roughly 40% of private companies will encounter a lawsuit from an employee at some point in their life cycle. It happens a lot, and you'd be surprised. We'll kind of go into some of those claim scenarios and why it happens so frequently. And so what we're going to do is actually talk about, how do we think about what those risk exposures are? What are the tactics? What can you do to mitigate some of those? And then we're going to go into some of these coverages, including workers' compensation, employment practices liability, and crime. And these are going to be kind of the core three that are essential to, managing the risks that come from essentially having your team operate. And so if we think about, hiring and scaling, in your team through the lens of this risk framework, this is why what we're talking about is so important today, because you don't have the choice to avoid unless you say, hey, I'm going to be, a solopreneur and I'm going to build this on my own, right? You have to grow and hire. It's part of the job, right? You could try to reduce the risk, right? Things like implementing formal onboarding process, rigorous hiring and firing processes, employee handbooks, hiring, VPs of people, et cetera. Those are some of the things that you can do to mitigate and reduce the risks. Transfer is obviously purchasing, and then accepting is hoping you don't face any lawsuits, which is, always a little bit of a risky strategy. But also saying if you're opting not to get coverage or, take precautions from a mitigation perspective, you have to build these things into your budget. And one of the unfortunate things that we've seen is a lot of very early stage companies that, haven't run businesses before or haven't seen these risk exposures come up. Some of these lawsuits can be so expensive and detrimental to a company. And again, this is not my scare tactics portion, I promise, but it can essentially be the demise of a company at the end of the day, because some of these lawsuits will ultimately get so expensive. So hopefully we can help avoid some of that with some of the education today. So Chris, do you want to go through some of the scenarios in terms of what are the actual risk exposures? Why is it so scary to hire a team? What are the things that actually can happen?
Yeah, absolutely. Thanks so much, Allie. So when we're building out this deck, something that we run into a lot on the early stage side of things with these earlier stage companies is that they typically take a reactive mentality versus a proactive mentality when it comes to insurance. And that can get, as Allie said, a little bit scary there. If you are just saying, hey, I'm willing to accept this risk, kind of build it into my budget, especially if your budget's not that big and you don't have a lot of wiggle room to kind of work with initially there. So what we kind of recommend here, and you're all taking a fantastic step by even just joining this kind of webinar, is being proactive. So being proactive with insurance really just means that you can assess your potential risks, purchase potentially the right insurance coverage, or talk to the right people before you even get into a sticky situation. So it allows you also to compare other insurance policy plans, kind of shop the market too, if you're taking a more proactive approach versus a reactive approach. And then you're not trying to buy insurance after an event has already happened, which is a big part too. If that claim's already happened, it may be too late for you to even get the proper coverage that you need, or that proper coverage may now be outside of your budget for insurance. So taking that proactive step with insurance really does help to mitigate your risks, can help you avoid some financial hardship down the line in the event of an unexpected loss, and then really just set you up for better success in the long run there. So this kind of just to start off, I think gives us a good jumping off point of what we're thinking of should be taking typically a proactive approach rather than a reactive approach, especially when it comes to more complex things like commercial insurance. We can go to the next one. Awesome. So you'll see here to touch on those mitigation tactics that Allie had already mentioned there. So there's multiple things that you can do to help reduce the risk of a claim happening in the first place. Shameless plug here, Vouch clients do have access to several perks from many partners like Athena, Vanta, Nyland Johnson, many more to kind of decrease your exposures. And this really helps you, again, kind of taking that proactive approach, whether it be like a pre-claim legal services, help with compliance, people training, and more there. So a lot of things we can do to kind of mitigate that risk. Having clear policies and procedures is a huge advantage. Conducting training on a regular basis with your employees also really helps out there. And then I'd also say consistency is key when it comes specifically to employee matters. So treating your employees fairly and consistently across the board from the very beginning is very important. And then also documentation, super huge in this kind of space as well. You want proper employee documentation. And I know a lot of companies in this space, sometimes it is the chief everything officer. So resources like this can be really beneficial to you to kind of give you more of that guidance, whether it be from a legal compliance standpoint or an HR standpoint, can also kind of be a little bit more budget friendly than bringing a person on initially as well. So these are some of those risk mitigation tactics, and we'll of course kind of start to dive into these a little bit further as we go through the individual coverages as well.
Awesome. And one thing I'll add, I think one of the things that I was kind of surprised by in joining Vouch and starting to see a lot of the things that come up from a claims perspective is what's required actually on a state-by-state basis, right? From a training perspective. So sexual harassment training is actually required for all of your employees, especially if you have employees in, it's required in, I think, California, New York, and I think Illinois now is as well. And so it's one of those things where when you're, an early team, let's say you're 10 people, it's one of those easy things to say like, well, I don't know what's required. We're only 10 people. Is that necessary? Like, I don't know if we have time to kind of figure this out. But again, if something happens, there's a lawsuit, a sexual harassment lawsuit, right? And you haven't done the right things, right? Proactively in terms of doing that training, that documentation, et cetera, can be really hard to kind of win those types of lawsuits, right? And that's where it can get incredibly expensive for your business. So doing the right things from the get-go, even if they feel tedious, even if it feels like overkill, we promise it's not. It's super important. And that's why tools like Athena, through Vouch, actually, we do for our clients, if you're under 15 employees, you get free sexual harassment, super easy to set up. So finding those types of partners that make it really easy to satisfy those compliance requirements, just another thing you can kind of check off and kind of sleep a little bit easier at night knowing those things are taken care of.
That was free sexual harassment training.
Yep, exactly.
And I will say for something that we recommend, because oftentimes we get the question at Gust Launch. In Gust Launch, we have contract agreements to set up a contract relationship with, early small businesses, agencies, people that are helping out. But a lot of people are like, oh, great, where are the employment agreements? And we almost always say like, don't just go get an employment agreement somewhere and like hire an employee. Like there is so many things that you have to navigate, not just with insurance, but also like payroll, minimum wages, the appropriate record, all the things that's like, there are little entire businesses built around this, like Gusto, TriNet does it. I think we're a TriNet user, one of the, I've hopped between the two, like every 2 years, it makes my head spin. But it is really like, once you actually start to get a W-2 employee, you want to be sure that you understand everything you're doing, because you can really you can expose yourself quite a bit if you just kind of like sign documents on the internet and start treating people like they're employees, but you don't fall in with the rest, which is why one, in the early stages, it's usually easier to do contractor stuff, but you want to be sure you treat them like contractors and you do not treat them like employees. And two, when you're ready for employees, be sure you do things kind of above the board.
100%. And those, whether it's TriNet, Gusto, Rippling, they all have great like free resources too. Like if you're overwhelmed by the idea of like drafting a whole employee handbook, you don't have to start from scratch. Like all those companies have really great resources. Ryan, maybe at Gus, you guys have some of those or have aggregated some of those as well, that are just great templates. They'll get you started. They'll tell you what you need, and you can kind of customize it for your business too. So it's very worthwhile, even especially before you have like a people team or a specific person dedicated to people, to put some time and energy into defining what that looks like.
Yeah, I threw a blog post in the chat that's just about contractors versus employees from us, but real resources for when you're ready for employees will be in the realms of who Ali was mentioning.
Perfect. And if anybody has questions too, we have relationships, I'm sure Gus does as well, with a lot of those payroll providers, and kind of, advantages of working with different ones as well. They're all good at different things. So cool. All right, Chris, are we ready to get into the meat?
Yeah, we'll get into the meat, the fun insurance portion of this meeting here. So starting off with workers' compensation. So just another quick disclaimer kind of on this one, not actually part of our Vouch proprietary products. However, we do offer this through our specialty team. Typically, we recommend that you secure this through your PEO there. So kind of diving into it, what exactly is workers' compensation? So what it's designed to provide medical and wage benefits if an employee is injured on the job. Now, typically when people think of workers' compensation, what immediately comes to mind is something like more of like a blue collar job, I would call it, like construction, maybe you're in the manufacturing business, instances like that. However, there are some other instances where workers' comp is relevant, even in a more traditional kind of office setting, or in the tech world even. So it's very important because it protects you and your employees should physical injury occur on the job. Not only that, but it also keeps you compliant. In a lot of states, it's even just mandated. So I know I'll throw out like New York, Massachusetts, California, for instance. Once you get to your first employee, it typically becomes a state mandate. So something just typically like check with your state on. Again, those free resources we mentioned previously are also good at keeping you kind of compliant there. Not only is it also helping you stay compliant, it's also kind of giving you that peace of mind there. So just knowing that if one of your employees were to become injured, it's designed to protect them in that instance. It's not something you're having to dip into your capital for to pay for that extended medical leave or for their injuries. So it's really important in that aspect. And then also retaining and attracting top talent there. That's a really big thing when you're trying to grow your team, is making sure you have the right people in place, and having this kind of coverage already secured or securing it as you onboard that first employee is going to just help you kind of retain and attract other future talent to help your business grow there. So as soon as you have W-2 employees, it is immediately kind of a requirement in all of those 50 states. Can kind of dig into the contractor side, a little bit of things there as well, but very important just as you're growing initially there.
And Chris, we have a really good question from Elias in the chat. How does remote work, IG working from home, influence and impact workers' comp?
Yeah, absolutely. And it's a great question. So it does depend kind of statewide there. So a lot of teams are dispersed now, remote. I'm myself, I'm a remote first employee. I know Ali bounces around as well. And I'm sure Ryan has team in a lot of different places as well. So this is where it can kind of get tricky into the weeds a little bit of things. People being in different states, there may be different state regulations and compliance issues to kind of deal with there. I know workers' compensation, again, is mandated in all 50 states. So it should be something you're able to obtain even for those remote employees while they're domiciled in the US.
And Chris, actually, I'm curious this myself. Have you seen, like, if someone is working from home and they get injured in their home while during working hours, is that something that's covered during with that workers' comp coverage then?
Yeah, so it's a great question. I believe I've seen that picked up before. Again, as long as you have a policy in place there for that remote employee and it's compliant with the specific state that they're working in. I mean, even if you have, I think we go on in the future slides to kind of go over some specific claim scenarios. It doesn't always mean like a really severe injury. It could be something like, I'm trying to think of an example off the top of my head here, Ali. When you're kind of like stress injury, I guess carpal tunnel syndrome, something along those lines could even fall under a workers' comp claim.
Got it. Not just, me tripping and falling in front of my desk, which happens frequently.
Potentially there too. Exactly. So these are kind of the key exposures that are going to impact the cost of workers' compensation. So typically ranges from about 75 cents to do $2.75 per every $100 in payroll. Again, dependent on the state and then employee classes. So getting into employee classes, it is going to be dependent on the nature of work that you're engaged in too. So premium does get dictated to an extent by the type of work you're engaged in. So say, for example, you're a SaaS company, typically less exposure than a manufacturing company. So your premium may be a little less expensive than your buddy down the street who owns a construction company. Claims history is also a major impact here. So frequent claims, previous severe injuries, typically likely to increase your workers' comp there as well. And then going back to that employee classification, just the work that they're doing. If it's mostly sitting, typing at your computer, probably less of a risk. Maybe we get into that carpal tunnel syndrome, maybe a trip and fall situation like Ali referred to there. People are kind of just a little clumsy around their desk material versus someone actually working in like a higher risk manufacturing kind of job there. And then is going to depend upon geographic location as well. So states, different rates mandated by those specific states, and then company size. So typically you think of it as like a larger company, more employees, more payroll, typically a higher premium as well. Some things you can kind of do to reduce the premium on your workers' compensation side would be implementing some safety measures. So safety programs, training employees on safe work practices are things you could do to kind of help bring that down a little bit.
And Chris, this is a good question from Joe in the chat. We talked a little bit about carpal tunnel, but he said, what happens if there's a car accident going to a client meeting?
Yeah, it's a great question. So it is relevant, especially if you have, I'd say, like an outside sales team there. So if they're in the course of business traveling to and from work, as long as they're in the course of business when they become injured, this workers' compensation coverage could become really relevant. So if you do have people who are frequently traveling, whether it be like in an airport, through taxis, Ubers, buses, their own personal vehicles, even, the workers' compensation, if they are injured, is certainly relevant. Maybe you have people attending a lot of like vendor meetings, things like that too. Very relevant. Awesome. And then some key kind of trends that we're seeing. So touched on this a little bit. It is a dispersed remote first workforce nowadays more than it used to be. So employers should consider the potential for work-related injuries or illness that could occur even outside of the traditional office space there. So going back to traveling, or going back to being at your own home office and maybe you trip and fall, something happens there. This can include injuries while working from home, traveling for work, or even during, say, a virtual meeting or conference such as this. And then we have seen some advances in technology recently as well. So kind of goes back to like wearable devices and sensors that can now track employees' movements, even those workplace safety conditions that can kind of monitor those in real time. So telemedicine also becoming more relevant, allowing those injured workers to receive medical attention remotely rather than becoming injured and having to travel to a physical hospital as well. And then there's some mental health coverage. It's becoming increasingly important with workers' compensation and increasingly, I think, more relevant just in the world that we all live in now. So a lot more states even requiring like a PTSD and other mental health conditions related to workplace injuries in workers' compensation. And then lastly, we all were impacted by COVID-19. It did shift the way people work, kind of going back to that dispersed remote first workforce there. It could even put some workers in certain industries at a higher risk, which would, of course, impact your workers' compensation coverage there. So maybe you're engaged in medicine, you work at a hospital. Instances like that, too, could put you at a higher exposure of contracting a disease or work-related illness, which would then in turn be picked up by this workers' compensation coverage. Awesome. So kind of getting into some of these claims, and I'm glad we threw it in here. So the slip and fall, typically what we see here. So don't think of this as a third party. Think of this as like your full-time employee here, tripping and falling. Maybe you have an office party, somebody slips on some spilled champagne, you just had a great launch, hit their head that way. Instance like that designed to be picked up by that workers' compensation. Going to that fun carpal tunnel syndrome. It sounds like it might not be that big of a risk. I know I do a lot of typing during the day. I'm sure a lot of other people do as founders or employees, and it could be covered by the workers' compensation as well. And then even throughout the instance of a workplace violence, probably not fantastic, but it could be picked up by this workers' compensation coverage as well there, if they were to result in like physical harm.
I think something that we learned on one of our last things is this might not just be a good idea to have, but also like even common startup things like getting a WeWork or getting a shared office space or something like this would actually mandate that a company has this before they give them office space or something like that.
Yeah, absolutely. So you will commonly see this wrapped in with like a general liability requirement when it comes down to it. So not only protecting like a third party instance of injury, but also your own employees or yourself through that workers' compensation, that first party coverage.
And then I think it's also important to note, like when you think about the types of claims that could arise, and we talk about risk mitigation tactics, right? Something like doing a stipend for your employees when they're coming on board to be able to set up their work from home setups, get an actual good ergonomic chair versus working on the couch, right? Those types of things, if we're able to do so, can certainly kind of mitigate the risk of some of these things happening.
Absolutely.
Cool. Let me just check the chat. I want to see if there's any questions. Okay, cool.
Do you have damaged spaceship coverage?
I saw that. That was great.
I don't, it's on the vouch roadmap.
I'm
We're
sure it
getting
is.
there. But yeah, now let's talk about employment practices liability. This is what we often say is like our soapbox coverage here at Vouch. Sometimes we do see it actually required either through like customer contracts or third parties requiring it. But overall, even if it's not required, this is the coverage that we will this is the hill that we will die on, that if you get one thing, one insurance coverage, you should get employment practices liability. Again, the claims that we see that come up in the EPL space make up the majority of claims that we see across the board here at Vouch with the customers that we work with. So think about, some of them can be high severity, some of them are lower severity, but they're pretty high frequency generally. So without setting the stage, I'll hand it back over to Chris.
No, thanks, Allie. Yeah, and thanks so much for setting it up that way. This is something that comes to my mind as people talk about hiring immediately. My typical recommendation in certain states that are more litigious, like California, New York, even Illinois nowadays, is after employee number one there. It is a more frequent claim. 40% of companies get sued by an employee, and we've seen that average cost of around $125,000 make up the majority of the claims here at Vouch. So unless you're willing to part ways as an early startup with that $125,000, having a coverage like this in place could be really beneficial and save you guys from a lot of headache or even failure in the long run there. So it's really designed to protect your company from hiring and firing coverage against alleged discrimination, sexual harassment, or wrongful discrimination, and also termination. So it can be a financial drain, and then sometimes it is also compliance and a legal requirement from third parties. Kind of going back to that general liability, the workers' compensation, we also typically see the employment practices liability being coupled in there with those contractual requirements. It covers indemnification for loss, but also is designed to cover those defense costs that you may run into as well. So helping on the settlement side, the legal fee side, and also that judgment or any fines you may incur side as well of things. And then we can kind of touch on the pricing here. So again, typically ranges from about 75 cents to about $2.75 per 100 in payroll. Does depend on the state. So again, geographic location is certainly going to play a factor in here. Again, in those highly litigious states, think of California and New York, where a lot of companies are headquarters, may be a little more expensive. Size of the company certainly matters. As we can see their payroll, it kind of goes back to bigger company, more employees, higher payroll, typically higher costs when it comes to these coverages. And then again, claims history. This is something to be proactive about, not reactive about. We've seen it sometimes where a company unfortunately runs into an employment practices liability kind of claim. There may have been some alleged discrimination or harassment. And now that they have that pending claim, it may be too late to secure the coverage. So really helps to kind of have this in place, or at least have some strong anti-harassment, anti-discrimination, anti-retaliation policies in place and trained on with some frequency at your organization after that first full-time hire. And then some key trends that we're seeing in this space as well. So again, kind of going back to that remote, this is designed to pick up those remote employees as well, has created some challenges for employers. So they have to ensure that their policies and practices related to harassment, discrimination, hiring and firing are effective, even in a remote environment. Good thing about Vouch's policy, it does technically have a worldwide coverage territory, meaning that we do understand there's a dispersed workforce. Things can happen in different instances. So we're picking those coverages up as well. I think diversity, equity, and inclusion for employers has also become top of mind for a lot of companies, and certainly more relevant. So they're placing greater emphasis on creating diverse and equitable workplaces. And this employment practices liability to provide protection against claims related to any allegations of discrimination, harassment, et cetera, that may arise there too. And then also important for wage and hour claims, unpaid overtime, maybe a misclassification of an employee. They have been on the rise in recent years, I think a lot in part due to that kind of dispersed remote first workplace. can help you stay compliant with state and federal mandates surrounding wages and hourly employees as well there. And then going to the legal and regulatory changes, it's pretty fluid. It's constantly changing. I'm not on top of every single thing that changes around employment law. I'd of course recommend that you kind of loop in an employment lawyer for instances like that. But it does help you stay better protected than not having the coverage in place. It makes it hard for a company to stay up to date with all those changes regarding employment, wage law, and et cetera. And having this EPL in place can really be a good starting point to kind of cover your butt a little bit while these things are so fluid and changing.
Yeah. And one thing I'll highlight there, like you can't replace a good employment practices lawyer. When you find those people, they can be so valuable. We have a great relationship with a firm called Nyland Johnson. There are some wonderful other firms out there that can really help, walk you through specific scenarios, how to prepare. One thing that came up very recently that was very top of mind for a lot of folks in the wake of the SVB crisis, right? A lot of folks didn't know if they were going to be able to access their payroll or access their funds and make payroll that week. And they were wondering, like, what am I liable for? What is the FDIC liable for? What's covered, et cetera. And so those types of lawyers will help you work through those scenarios that hopefully don't come up too often. But as we saw, they come up and they cause chaos and can be a little bit scary to kind of work through.
Right. And then just like the employment practices law is changing, your business is also going to change over time. So there are evolving business needs. So as your business grows and evolves, your employment practice liability coverage needs may change as well. So it's important to consider again your employment size, your organizational structures, expansion into new markets, et cetera. And then changes in employment laws, like we've touched on, can significantly impact your employment liability needs. So I think of a lot of times business expansion in this instance. So more employees, more risk, time to start thinking about employment practices liability. Even if you might be best friends with all of your employees today, things can change pretty drastically, especially if you get to a point where you're actually having to terminate some employees or end those contracts with contractors. It can get a little bit dicey there. And this is an important coverage to have in place to kind of protect you again, even if the allegation is frivolous. This employment practices liability can still come into play and protect you from those legal fees, fines, judgments, settlements that you may incur. So one way to kind of, again, mitigate the risk if you're not ready to quite purchase employment practices liability, if you do have employees or contractors, is to constantly kind of gather your employee feedback as well. So conducting regular employee satisfaction reviews can help you identify some problems in your company that you might need to address immediately, or help you identify some places, some things that you're doing really well. Kind of goes back to all of that. And then claims history of your business over time. Again, if you have multiple disgruntled employees leave your business, it may be too late, unfortunately, to secure employment practices liability. So taking that proactive step, using that proactive mentality versus the reactive mentality can be really helpful when it comes to this coverage.
Cool. And we got a great question from Peter in the chat. Are both insurances, workers' comp and EPL, required? So workers' comp is going to be required for W-2 employees in pretty much all 50 states. EPL will often be required by third parties that you work with. By the time you get to a Series A, you're probably going to have someone that requires you to have EPL, but we would highly encourage you to get it as soon as you have W-2 employees outside the founding team. It's typically, we can't emphasize that enough. This is a big one. And then we had another question actually in Q&A. Chris, is a founder who is in the process of being vested considered an employee, even if they receive no money and are not considered an employee?
Let me get that one real quick, Allie. It's a great question.
I know some answers to this.
Yeah, chime in, Ryan. I'm just reading it back now.
Yeah, so this gets often confused, is usually founders of a company they do not start out by default as employees. They might be officers or directors of the company, but they don't have like a W-2 if they're not getting paid or if they're not on payroll or whatnot. However, it depends on what state you live in, and it depends on this is the funny this is the funny scenario of like, how much risk do you want to take? So I know that California in particular considers everybody an employee in some way, even the founding team. And so is California going to knock on your door tomorrow after you started your company and say, hey, why aren't you paying yourself minimum wage? Probably not. However, if you had a co-founder or an early employee who was a co-founder and is like, I'm sweat equity 100%, I don't need any money, like, let's make this work. And then huge misunderstandings arise, and then they come back after being dismissed from the company, they are probably well within their rights to be like, you should have been paying me minimum wage. Look at California, all these laws, blah, blah, blah. And they could actually make a case like that. So, and I'm pretty sure every 50 states a little different. I think California is just the outlier of the front runner of policy that makes things inconvenient sometimes for startups, but is often a very popular state for startups to be operating out of.
Absolutely.
California is always the problem child.
Mm-hmm.
That's super interesting though, Ryan. That makes a ton of sense. And it just goes back to how the states like to make it difficult on all of us.
Well, yeah, the states generally, they will not tell you like what you should be doing, but they will lay enough ground so that if they think you did something wrong, they have every mechanism they need to basically extract what they want out of you. You know, something in our court is like foreign qualification. If you're doing business in a state, you technically need to foreign qualify. If you go and ask that state, well, what kinds of things mean I'm doing business? They will give you a short list of things that aren't doing business that are kind of vague and not sure, but they will never tell you immediately like, oh no, you're not doing business, you're totally fine. They'll just be like, you decide. And then 3 years later, they'll send you a letter that says you were doing business in the state for the last 3 years. Please go file all these things and pay back taxes and happy, pleasant things like that.
The best. So lovely.
A lot of fun.
And a good question from Brandy, I love this one. Is there a specific way to document that is required or a best practice to reduce the liability? And I'm curious, Chris, Ryan, you probably have additional things to add here. I think the best thing that you can do is set up like a true employee handbook. Write that, get all of your processes documented. How do you like to hire? What is your, firing process? How do you onboard new employees? What are your company's mission, values, employee benefits, perks, right? Get that all down on a book and also revisit it periodically. I think what can often be tough is, right, you write that at, the earliest of early stage when you have 5 people, and then you don't revisit your handbook when you have 150 employees. And guess what? You've got a lot of other processes that you kind of do and have been established, but that aren't officially documented. So making sure you have a process for that document to kind of evolve over time as the company's infrastructure and processes evolve. And there are tons of great, whether it's through like PO, payroll providers, there are tons of great like templates that you can kind of copy paste and then fill in the blanks in terms of how you anticipate your company kind of operating. And often those documents will include like a lot of best practices too.
Yeah, couldn't agree more on that point. And then it does help with consistency too. So like, as Ali said, if you have that employee handbook already in place, like now you have kind of a template for how you want to go about even interviewing employees before you consider hiring and then bringing them on. I think recording some interview calls, things like that could be beneficial. Even having like a third party with you if you were to terminate an employee or as you onboard that employee is really important too. Having multiple kind of sets of eyes and ears on something can help you in the long run too there.
And I'll add in on the handbook side, from my experience with startups, especially hiring in a really aggressive market, you can not only do this just to like check a box and to make sure you're like slightly more covered. If you do that from like just take a template, you are basically going to have a public template of what a lot of companies do. And if employees are, spurned or something happens and they have legal counsel or whatnot, often you will be less aware of your exposure thresholds from your old handbook. So if you lean into the handbook and make it something that your company owns, and it doesn't have to be big in the beginning, but one, it can help set corporate culture. It can help set hiring to anticipate and answer these questions, even if they're uncomfortable questions. And often they're just great, information for an employee to have. It helps with onboarding. You can really lead a lot. And this is really when you're scaling your team. I wouldn't say like my first step with me and my co-founder is to write our employee handbook and read it ourselves. But it's like when you're actually hiring people and you're paying them salaries and fair wages, and these are people looking to grow their careers and they want growth and they want to be able to learn their skills and whatnot. A handbook can be a really dusty, dry thing from ADP that nobody ever reads until they're really angry at the company and they find every letter of the law to go in after them. Or it can be something that they actually read and say, I'm actually really glad I work here. And I know vehicles of doing anything from boring stuff like getting vacation to complicated stuff like planning for a move or a kid or any of the, or just career advancement. I want to switch from being a a designer to a front end developer, and like, what are my, paths forward? Most people, absent, good practices, would be like, go work somewhere else. But if you have a good handbook and you have like paths and you're like, oh, you can totally safely open a conversation with leadership about transitioning, and maybe we could do something, employee retention, yada, yada, yada. I'm a big fan of good handbooks. I've written and contributed to many, and had, a lot of great employees influence ours in ways that like, this isn't telling me what I need. It's like, oh, that's a great retention tool, and even recruiting tool. Some companies publish their handbooks, to actually get, interest in new applicants because they read it and they're like, oh, I want to work for an organization that operates like this, rather than ADP 2023 best practices. Not throwing, I think, I don't know, we've used ADP. I'm not throwing them under the bus. I just know it's a template.
No, that's so fair. It's not just about like being on the defense, but how do you be on the offense, right? And actually use those things to your advantage. We at Vouch actually every 2 years, we actually revisit our company values and in our mission and make sure that they're still aligned with how we're growing, how we want to grow, the types of people we want to hire, the standards we hold people to. And I think really clearly defining a lot of that helps us make sure that we're bringing the right people into the organization in the first place. Having those values is a big part of our interview process and how we make decisions around what people to bring in. And so I think that helps us. That's a risk mitigation tactic in itself, because we're filtering out the types of folks that we know don't necessarily thrive in our culture, that aren't going to be a good fit for us in terms of holding up the same values that we have in terms of putting people first and, team mentality, et cetera. So such a good point that it really can be an offensive tactic as well as defensive as well.
Absolutely.
Yeah, that is great. Both of it, not mine. I'm not giving my own points greatness. But
You started it.
But I think with anything with startups is it's often, I say this on almost every event because we get a question about it. It's like, none of this stuff happens automatically. Like I said, California doesn't knock on your door and say, why aren't you doing everything to the letter of the law? Employee doesn't start in day 2, decide to sue you over something because they were like ready to go. These things always happen like slowly and then suddenly. And without any kind of, being proactive and being on the offensive and leading with that is like the best possible thing in the world is to never get sued by an upset employee because of unclear work practices, right? You might have a complete culture and expectation and whatnot. And somebody, you're never going to stop, bad actors from trying to be bad actors. But the biggest thing is like hiring people. If you make it very clear what working there is like, and there's no surprises, like you make it far less likely somebody's going to be upset by, something that goes on. And so you can really lead with that and then just be sure that you have, the coverage in the case of like, insurance in and of itself is like, this doesn't happen to everybody, but it happens to a small percentage of us. So wouldn't it be great if we all put money in a pile that says, if I'm the one who it happens to, I'm at least not going to go out of business or, have my life upended. And so you can really get the best of both worlds by being proactive about building your culture and protecting yourself from real things happening, while also being sure you have just enough, the right level of coverage in case all your preventative measures didn't wear out, you just got in a tough situation or an SVB thing, something that's just completely out of your control as a business, but nonetheless impacts you.
Absolutely. And on that point, kind of just wanted to give everybody a visual here. So some thought bubbles, like what to be thinking of when you hit certain milestones with your company growth. So your company's funded, let's say we're going to hire some engineers, some contracted engineers in a different country. So we want to be thinking about those too, because those can be picked up by employment practices liability. Now, big thought bubble with the employment practices liability, we're hiring that first employee. Really important there. We've touched on California a lot, kind of pick on it a little bit, but it's very important in a highly litigious state like that. And as Ryan said, no one's going to knock on your door to tell you that you need this until you get a little farther down the line. So being proactive, kind of having that thought even just pop in your mind is really important there. And then we kind of split it off just to show that it can get a little complicated now. So let's say your first employee moves to a new state. Employment practice laws, workers' compensation requirements, things like that are going to kind of change with that new state that they're moving to. Maybe you hire an employee number 2 and they're in an even different state. So again, kind of just adds to the confusion there. And really, when you kind of want to take advantage of some free resources, get in touch with your insurance agent or advisor. And then also, if you do have legal counsel, get a dedicated employment lawyer, because they're really going to be the ones who keep up with the changes when it comes to employment practices law and can kind of advise on what that looks like moving forward as your business grows, as employees move, as employees are terminated. Awesome. So fun little claim scenarios here that may arise for a business similar to yours. So one would be, quick call it just a wrongful termination suit. So say like the Series A ad tech startup, they receive a demand letter, employee alleging gender-based wrongful termination and retaliation. This is an instance even where if you're not actually found guilty of that, this employment practices liability can come into play and protect you, those attorneys' fees, defense fees, settlements, etc. Discrimination is a big one. Maybe it's based on disability. So the former employee against a Series C fintech alleging discrimination and retaliation based on disability. Everybody kind of deals with their own things. This is something that can come up as well and be covered by that employment practices liability. And then finally, co-founder defamation. We do see this, especially as things kind of change in the startup realm here. Ryan even touched on it earlier. There's a disgruntled founder. Co-founder leaves a real estate tech startup, leaves the company due to disagreements with other executives on the team. This is going to kind of come into play there, help you reach that settlement, help you pay those legal fees, fines, judgments, etc. So very relevant, even if there's multiple co-founders, a lot of people with their hands in the honeypot kind of situation, termination, discrimination, etc. there. Awesome.
And I know we're running a little bit short on time. So Chris, maybe we go through crime a little bit quickly.
Absolutely. So we'll just jump right into it. Maybe a little bit later down the road, let's say like employee theft or embezzlement, forgery, computer fraud, funds transfer fraud. Those are all instances that are designed to be picked up by this crime coverage. So employee theft is a big hitter. So it does cost US businesses about $50 billion per year. Of course, some larger companies probably contributing to that. I'm sure a lot more to kind of steal or plagiarize, embezzle there. But they can carry abnormally high cash balances. If your employees have access to the cash balances, could be something that they could embezzle, take away, transfer to different accounts, etc. So once your employees have access to company funds through financial accounts, super important to kind of get the ball rolling with the crime coverage, at least have that in the back of your mind. Even if they did have access to like your client payment information, important there to make sure that if someone were to be a bad actor, kind of steal some extra information, at least you're protected on the back end here. So again, kind of going into cost, these is actually kind of going to be what we typically recommend with coverage limits here related specifically to the employee crime. So you can see in some scenarios, it is going to be more relevant in certain industries. Say you're in a fintech industry, you're a payment processor, it's going to be more regulated. You're also going to potentially want some more coverage there for your crime, just higher likelihood of that kicking into gear there. So security measures and controls are a big one on the crime side, just making sure that your company knows where the money is, where the money's going, who has access to the money is just a real good starter there. Yeah, I guess we can kind of just skim through these ones, Allie. Awesome. And then getting back into our key trends again, I know these are a little bit repetitive, but employee theft does remain a significant risk no matter the size of business. If there's cash flowing in, someone has access to that cash, it could become a problem there. More technology, employees are able to engage in different kinds of fraud nowadays and different kind of transfers. So that's also something to be very aware of. So having those strong internal controls, a good grasp on the money should be flowing in and out in communion with the crime insurance is going to set your business up for success there in the event of a bad actor.
Definitely. And one thing I will just add to it, with the remote first workforce, it's just harder to know what people are doing generally. And some things are, unintentional too, right? Like
exactly.
At the end of the day. And so, the more spread out the team is, you want an independent workforce that you trust, but the reality is the less kind of visibility you have into what people are doing. And so sometimes it takes a little bit longer to catch on to things that might be happening that shouldn't be happening necessarily.
Exactly.
I have an odd question about crime. If it is an employee who is committing a crime, but it's like they're being fished into it, is that a different coverage level? Or is that like somebody else committed a crime against the organization? And now, like, even though my biggest example is like, I've been at Gus for 10 years, the amount of ridiculous emails our accountant has gotten from our founder that's just like, oh, like I'm on the run. I'm not on the run, but they probably are. I'm on the road and I need you to transfer like $13,000 like to this thing. Please do it by the end of the day. Like the event's really important. And it comes from his email address. he is known to send crazy emails before. And I just like, please check with me anytime you get a direct email you didn't expect, because we don't, we have to verify it. But is that a different kind of coverage? Is there insurance for that? Or would that be crime just viewed from a different lens?
Yeah, and I'm glad you kind of bring it up actually, Ryan, because it leads perfectly into some of these like claim examples that we're giving for the crime. So viewed in a different lens, but working with this coverage. So like going to that costly email virus attack, say like there's that phishing scheme. You click on the link, the Prince of Saudi Arabia needs you to send $5,000. Someone buys into it. People do buy into it. So instances like that could be picked up by the crime policy, just paying out those crime limits there. And then embezzlement's another big one that does happen with some frequency. So online document management platform embezzles a significant amount of money, and these can happen over time as well, which is the good thing to know. So designed to kind of pick that up as well if it occurs during the policy period, which is a good thing to know. So phishing attacks more relevant, especially nowadays with technology, those virus attacks as well. So very relevant if there's cash flowing in and out of the business.
Yeah, you'd be amazed. This was not a claim that we handled at Vouch, but I think one of my favorite examples is just because it's so ridiculous. There was an employee at a Series B fintech, and he didn't have the liquidity to afford his stock options that had vested. So he wired himself money from the company Stripe account to buy his own stock options. And you can tell obviously what happened when that was investigated and found to be true. But it just, the more people you hire, the more risks there are in terms of, people having access to those types of accounts and things happening. So
I even had a friend who got a laptop from somebody else that was supposed to be like bought it second, that was supposed to be cleaned. She opened up Facebook, already logged into an account of not only maybe the previous laptop's owner, but they had high level Facebook permissions for a different brand. So they literally had a budget, and they had like a ton of access where they could have like spent a ton of Facebook's money on like whatever kind of ad schemes they wanted to, or something like that. It's just, it's pretty wild out there. The bigger you get, and
it's wild. It's totally wild. And then just quickly, Ryan did an amazing job on the Vouch pitch earlier. We are here to support you, whatever you need. We have a whole team of insurance advisors that spend all day, every day, like Chris, working with founders like yourselves in terms of working through where you are, what your risk exposures are, how much coverage do you need, et cetera. So bottom line is we are here for you. We offer all the coverages we talked about today, and a lot of the coverages that we're going to talk about over the next couple of weeks and in these future sessions. And we have a lot of resources too. So we'll have Ryan, we'll share these out in the follow-up. Sebastian is on the call. Feel free to reach out to him if you want to connect with an insurance advisor. Ryan also shared Blair's calendar link directly in the chat, so that's perfect. Feel free to use that as well. We're here to support, and we've got a ton of resources depending on your needs and what you need from us. And so I want to be respectful of everybody's time, because I know it's right at 4 p.m. But Ryan, thank you so much for having us, and appreciate that we were able to get through a lot of the questions that people were asking over the course of the presentation as well.
Yeah, that worked out pretty great. We're right at the top of the hour. Look out for that email in coming days. We'll also include links to sign up for the other parts of this series, So if you hang out with us for the next 2 weeks or 3 weeks, I guess, you should really be equipped for any kind of the insurance journey stuff. I would say we have actually used Vouch ourselves to do the evaluation. And the reason why we're so pleased to bring them back in the community is because of the experience. I have worked with insurance in the past, business insurance, and it's usually like my accountant sends me a geriatric PDF with questions that I could not even tell you I understand. And I'm a technologist, I have an engineering background, and it's about like cyber insurance and like walking through these things. It's like, oh my God, like this is painful. And it's much different. And I imagine if we didn't already have reference policies, starting a new startup, having that kind of like peace of mind of like, hey, every quarter, every month, every 6 months, just knowing that like, as I'm making progress, I'm going to be sure that I protect that progress. Because all the failure stories, you hear the high profile ones, the founders who oversold things, but the hundreds of thousands of stories are just little murmurs out because of a weird technicality of like, oh, we just didn't have enough money to cover that thing that happened. We were going to spend this money on growing, and now we can't grow. And now we wind up shop. So protect your stuff. Thank you so much, Allie. Thank you so much, Chris, for having you both here. Have a lovely week, everybody. I'll see you guys in a week.
Bye, guys.
Bye.
Thanks,
Thanks so
Ryan.
much.